you've got residential, you've got rooming house, you've got commercial properties, you've got, even development plays in the future. What would be like from a person who's just looking to, build a semi-passive portfolio and just enjoy the ride as much? Like after all this experience and education, where do you sort of, find more comfort in the best opportunity for investors at the moment in the market?
Yes, I think, are you talking about if people are just starting off with their journey at this stage on where they...
Yeah. I mean, there's the income play. I mean, I'll break it down a little bit more. Like rooming house, there's a lot of education, and you've done a lot. Like there's years and years of experience that you've accumulated over time. It's not a simple, just buy it and do it to anything. There's a lot more risks involved. Why it's important to have someone like yourself to guide them through that process. Is the rooming play something that you're still passionate about, or are you more of a commercial person now? What's sort of that mindset?
Yeah, look, I think it's important to have the mixed strategy, because one area might go boom for a bit and then it's off the track, or the government might play their cards and change the rules around how you can operate certain aspects of it as well. So you don't want to put all your eggs in one basket, which is why that diversity is really important. I think one of the things when you look at rooming is that there's a lot more expenses. The risk is a lot lower in some senses because you've got like 6 leases in that property in Torquay, not just one. So if one moves out, you've still got 5 paying. So the risk there in that sense is a lot more diverse as well. But the expenses are all on us. So in other words, we pay for all the water, we pay for all the electricity, we pay for the internet. We pay to have the gardens done. We pay to have the cleaning on the communal areas done as well. So the expenses are a lot more than a straight rental to one person. But the income is a lot better. And then the risk is a lot more diverse as well. So it's just that I suppose the options is a lot more like that. With commercial, you could have it vacant for 3 months until you get a good commercial tenant in. But once you get that tenant in, you could have them for 6-7 years. Where, a normal tenant in a normal house, you might only hold for 3 years. So it's just that diversification and making sure that you don't have all your eggs in one basket would be my suggestion, and seems to have worked quite well for our portfolio and moving forward.
Yeah, it's a sort of, I don't know, dealing with clients that come on and they get really caught up in like, well, this is my first investment, and like it feels like they're thinking this is going to be their only investment. And when you're going down this play, it's like I say all the time, there's no perfect property. There is somewhat of a perfect portfolio to balance for your personal situation. I think that's like you're a perfect example of that. Is if you're going into this, for anyone that's listening, and you want to be a property investor, don't go in it with your one and done. Otherwise, you're not giving it its full attention, and then you're going to get caught up in analysis paralysis. And the true successful investors aren't just buying one stock, one property. It's the diversification that you mentioned is really key. What do you reckon, Jaryd?
That, yeah, I like that. I like it so much. And I also, adding to what you said, Lisa, is the way I think about when you're buying a property. Say somebody's buying a property now, and they're like, okay, I'm going to buy this property investment. If you want to build a portfolio, I don't think it's worth thinking about that, just buying that one in property investment. I think it's worth thinking about how do you get the next one as well, and what is the next one going to be in terms of like if you buy a resi property, or maybe you're buying your second or third or fourth resi property, and it's going to be for capital growth, and you have your structures in place so you can get financing for the next one. Then you think about like, what's the next additional property that I need to get after I buy this one I'm buying now, and how do I make sure I buy the right one that can get me to the next one versus like just freaking like I mean, I get when you're buying your first property. I knew that when I was buying my first property, I was like, I want a big property portfolio. And I think a lot of people are thinking about that. I was like, I want a passive income of 100K or 200K or whatever it is, but don't get too caught up, like you said, Sam, in that first one. Think about that next sort of, how do I get into that next one, and what is that next asset going to be? And Lisa, I'd love to pick your brains on that. How do you help people with that? Like, is it with making sure they get their financing and structuring right, or is it making sure they got the right property that can propel them to to that next one? Like, what are the things that you mention and suggest to your clients?
Yeah, I think it's building that team around you. So it's not just a buyer's agent. It's also making sure you have a good accountant who is a property accountant as well, who knows all the tricks, or not the tricks, but, knows that side of things really well. So, everything about, okay, well, we need to get a depreciation schedule. Who do you get that from? Depending on how old the property is, looking at what we can actually get or not do, having a good broker or to find out, where I can go and talking to them. Like, I don't want to go just this property. I want to go two. So what is my limit on this one? What else do I need? We also use a system called game plans, which is a strategic kind of system. So we can put the data into that to also help them work through what they can and can't do moving forward as well. So I think there's a lot of different tools out there that people can use, but it's getting them the right people around them who are thinking property so that they can actually move forward correctly as well.
Case by case, Jaryd.
I love it.
Yeah, well, it's really sage advice on that front. And I mean, like, this is a question that I get all the time. Like, obviously, you get the first time investors, they want to build that portfolio. The barrier to entry for commercial is obviously deposits, right? Like, from what I understand, but then the cash flow is really strong. Are you seeing that residential is always that sort of, first step, or, you've got a lot of experience in your end? What's your sort of mindset around that after everything that you've learned over the years?
Yeah, look, I think for an investor, unless they already know commercial or have had experience within that area, you'd be looking at for a first property for somebody, a straight buy and hold, looking at that growth potential to give them then that equity to pull out to then move again. So you're needing to build a nice solid base